Welcome, dear viewers. My name is Paul Buitink, and today I'm going to talk to my old friend and mentor, James Turk. James is the founder of GoldMoney.com, and he invented digital gold currency back in the 90s. I worked with James between 2010 and 2013, and he taught me a lot about economics and money. James, good to see you again.
Yeah, it's good to see you too, Paul, and congratulations on being a father.
Yeah, that's the biggest adventure until now. I know you're not a big fan of big government. So what's your take on the way governments across the globe handle the current crisis from an economic point of view?
Yeah, it's really just a sign of the times. I think the main thing to take away from all of this government action is that while the handouts and the borrowing, the new loans that governments are making, provide some welcome relief, from this lockdown and the collapse in economic activity, we have to recognize that new debt and handouts are not a substitute for a fully functioning economy. The economy is really suffering. We're at Great Depression levels in terms of unemployment and economic activity. And the thing that concerns me is how are you going to come out of this? The government seems to think that they can flip a switch and everything will return to normal. I have my doubts. A lot of businesses are going to be cutting back employees if they even remain in business. So I think this is going to take a long, long time to play out. And the fact that this lockdown is still going on, even though there's a lot of data suggesting that the peak concerns have passed us, the longer that this lockdown goes on, the worse it's going to be in terms of trying to get a quick recovery back to some type of normal conditions. And obviously this is going to have an impact on money because central banks are going wild, creating new currency. And we'll see how this plays out, but I'm very much in the camp that this is likely to lead to a collapse in fiat currencies and hyperinflation of fiat currencies.
Do you think it's good for the government to bail out companies like they're doing at the moment, for example, with airliners in Europe? Or do you think it's better for these companies just to go bankrupt and then be restarted with a healthy balance sheet and a more viable business model going forward?
The way the capitalist system works is that it's creative destruction. Old companies die and new companies take their place. What we've lost in recent decades is self-reliance. We've lost it as individuals, we've lost it as companies. I mean, look at a company like Boeing, the aircraft manufacturer. It did something like $20 billion of stock buybacks over the past several years, and now they're looking, along with other companies for, government handouts. I don't think that should be appropriate. I think that's all those stock buybacks were a sign of the times, the future, but we have to, and while we hope for the best, we always have to assume the worst. A lot of companies have not prepared for what we're going through now. I think they should be allowed to, go bankrupt and start again. The creative entrepreneurial spirit is a, driving force within humankind. And I think that that's what we have to allow to fulfill, to reach its maximum. And you're not going to allow it to reach its maximum by creating companies that are no longer required. But there's a bigger issue here. We've destroyed, money, and money is central to society. When you destroy money in terms of making it an ineffective measure of capital, making it an ineffective measure of how we spend our purchasing power, you end up making bad decisions. In the Austrian School of Economics, it's called misallocation of capital. And we've seen a lot of misallocation of capital. Did the world really need all of these huge 20-story cruise ships that are now sitting empty? Did it really need all of these A380 Airbus 450 passenger airplanes that were built? Or were they simply a function of misallocation of capital because decisions were made in fiat currency rather than in sound money? I think that's a clear example that it was a misallocation of capital. So as we think about restarting the economy, we have to think about restarting the monetary system and going back to gold. It's as simple as that.
But if you would have a gold standard system, for example, or maybe even a private digital gold currency system, or a world with competing currencies, wouldn't you still have the situation where, because of the lockdown enforced by the government, you would still see a lot of companies not being able to pay back their gold denominated debts, or they would still be probably going bankrupt, because a lot of companies were viable up until the moment that the government imposed a lockdown. Like 2/3 of all the bars in Amsterdam are going to go bankrupt if they can't open by the 1st of June. Would that not also be the case in a gold system?
Yeah, but what you can have is two currencies circulating side by side. You can have, fiat currency circulating side by side with gold currency, and let those bar owners and every company owner decide, are they going to accept fiat currency or hard currency? Are they going to price those things differently? Let companies make the choice. Governments shouldn't be making the choice. Let individuals make the choice as to what they're going to be doing. Part of, I was referring before to Boeing and doing all of these share backs. A lot of companies did share backs rather than saving money. It seemed to make sense. And that's, again, part of the problem that we have with fiat currency. It doesn't make sense to save fiat currency, because if you put it in a savings account at the end of the year, you're going to have less purchasing power because of financial repression by central banks. So what is the alternative? The alternative is to go back to what's been money for 5,000 years and recognize that this quote unquote temporary suspension of the link to gold that President Nixon broke back in 1971, 50 years is a long time for temporary, but within government definitions, maybe that's acceptable. But in terms of getting back on the right track, we have to learn from what's happened over these past few decades and where we are in the present situation, and go back to sound money. And that means going back to gold. It's been the center of global commerce for 5,000 years. It's still the center of global commerce in the sense that it is the numeraire. It is the sole money that we can effectively use to measure prices of goods and services, and how to make goods and services, and how to make decisions about the allocations of our capital for investment, or how to make decisions on a day-to-day basis for spending.
And earlier you mentioned hyperinflation as an outcome of current monetary policies. Last week I spoke to Jim Rickards, and he actually expects deflation. I also hear that argument a lot, because velocity of money is going down. People are going to not directly use most of the handouts they get, and will possibly try to save a bit or pay down debt. Of course, they need to spend money on food and basic services, but he expects velocity to go down or stay low. And as a result, the growth in the monetary base does not necessarily will lead to higher prices. In fact, the opposite. You said hyperinflation. Do you agree with Rickards that we possibly first get deflation and then hyperinflation down the road, or do you disagree with him?
Yeah, a couple points. First of all, let's address the issue of velocity. Velocity is declining, and you can interpret it two different ways. There are two different sides to that coin. I interpret it in a different way. When velocity declines, it means that there's too much money in circulation relative to the level of economic activity. And that, in my mind, is what happens before you go into the hyperinflationary stage. But let's discuss this hyperinflation or inflation deflation question, because it's a good one. First of all, let's define inflation in the normal way, which is rising prices as opposed to increasing in the quantity of the money supply. And deflation is declining prices. Well, I think the answer to this question is that you will get inflation, if not hyperinflation, when you measure prices of goods and services in terms of dollars. If you measure prices of goods and services in terms of ounces of gold or grams of gold, you're going to get deflation. That's just another way of saying that the gold price is going to be rising as we go forward from here.
Actually, yeah, that is the old way how at least the Austrians, for example, used to describe inflation or deflation.
Yes, and I guess it comes back to another point that I'd like to make, that when we do economic calculation, when we make an investment decision or decide to spend and purchase something today or to defer that purchase to a later date, we tend to use the national currency in the country in which we live. But we have to do more than that. We actually have to make these decisions. We have to use grams of gold or ounces of gold in our economic calculations, because only when you're using gold to measure the price of goods and services are you getting a true measure of whether or not your wealth is increasing or decreasing. And wealth, I mean in the broadest sense, not just your purchasing power, but also the assets that you're holding, your investments. You know, when you have a portfolio, you basically have two components. You have your investments and you have your cash or liquidity. And what I'm saying is that in your cash or liquidity component, you have to put your gold bullion there, because that's what gold is. Gold is money. It's not an investment. It's a sterile asset. It doesn't generate cash flow. It's not a common enterprise. It's a tool in commerce. And that's what money is.
But when we had the previous crisis, a lot of money was, of course, also being created afterwards, QE, bailouts, all of that. A lot of gold bulls, and I was one of them 10 years ago, would also talk a lot about hyperinflation that would be upon us. But 10 years down the line, we've seen, of course, a lot of asset inflation because of the way QE was structured. It usually stayed within the financial system and led to bidding up prices of assets, but it didn't lead to the hyperinflation in the traditional sense that like inflation rate of 50% or more of the CPI on an annual basis. We haven't seen that. So why would we see it this time?
Yeah, it's true. And, you know, I could be wrong. I'll be the first to admit it. You know, I'm just going in terms of a big picture. When you create too much money, when you create too much currency, ultimately people lose faith in that currency. And when you lose faith in that currency, you tend to get, you know, rapid rises in the prices of goods and services, which brings up an important point, because, you know, money in that sense, or currency in that sense, is like any other good or service. It's a function of supply and demand for that currency. And, you know, we tend to ignore the demand for a currency, and we just assume it's always going to be constant. But in a hyperinflation, the demand for the currency can fall dramatically, and that in turn leads to a rapid rise in the quantity, rapid rise in prices of goods and services, even if the quantity of money to remain unchanged. You know, if the demand collapses and the quantity remains unchanged, if you look at a good and service, the price of that good or service is going to decline. When we're talking about money, we can't talk about prices. We're talking about purchasing power of that money. It's going to decline when you have a collapse in demand. And, you know, another thing to keep in mind when we're talking about supply and demand of currency, it's that the currency is only as good as the assets backing that currency. And there's so much debt in the world today at every level, corporate, individual, and government. The assets on bank balance sheets, which are backing the currency that those banks circulate as currency, the quality of those assets are poor. I mean, you got the Federal Reserve now buying junk bonds. ECB has said that they're going to be buying, you know, junk bonds, or what I call junk bonds anyway, you know, really low quality paper. So if the assets are low quality, the liability on the bank balance sheet is low quality, and the liability on the bank balance sheet is what we use as currency. So to me, it's just basic accounting and basic finance that currencies are going to be destroyed, and I believe they're going to be destroyed by hyperinflation, whether it's a rapid increase in the quantity of money, which seems to be happening. I mean, the Fed's created $1.8 trillion in the past 2 months, or demand, or declining demand for that currency, which I think is also possible given the poor quality of the assets that are being monetized, or a combination of the two. I think it's going to lead to hyperinflation. But, you know, regardless, Paul, there's a simple answer to this thing. Gold's been around for 5,000 years. It's preserved purchasing power. And most importantly, it doesn't have counterparty risk. In other words, when you own physical gold, and for that matter, physical silver, which we can talk about as well, you own a tangible asset. Gold is money. When you own physical gold, it is money that you own. And that is very, very important as we go into what is now a deepening financial crisis. You know, we had a health crisis, which has turned into economic crisis, which is now turning into a financial crisis. And in my view, in the not too distant future, is going to turn into a banking crisis like we had back in 2008, like we had back in 1991, like we had back in 1984, like we had again and again and again. I've been through several of these in my lifetime, and they're recurring because we have a fundamentally flawed monetary system.
And I think that the Herstad bank crisis in the 70s was actually your inspiration to come up with GoldMoney, right?
Yeah, that's right. Yeah, that's right. I was very fortunate, I think, in terms of my business career, to be in certain positions at certain times, to learned a lot and have a unique opportunity to bring me where I am today.
It's providence, yeah. Well, I agree with much of what you say. What I'm not too sure about though is silver, because I do hear a lot of people saying, okay, gold you should own because they can print it, no counterparty risk, has been money for 5,000 years. I get it. Also because central banks are increasingly buying it again, especially the central banks of the East, China, Russia. But I don't see central banks buying silver, and I also don't see silver coins circulating anytime soon because the world is getting digital. So I understand the concept of digital gold currency. You want something to back your currency, and gold is already owned by the central banks. But yeah, why would we be interested in silver? I mean, for that matter, we could also buy copper or platinum or whatever. Silver is, of course, an industrial metal, but there are so many of them. So why would we still put silver in a monetary metal basket?
Yeah, first of all, let's talk a little bit about central banks, because my long-term view that the barbarous relic is not gold, the barbarous relic is central banking. And I think, in terms of the future of humanity and individual freedoms, the worst thing that can happen is for central banks to be buying gold. The classical gold standard is not going to be resumed anytime soon. Governments have understood how they can manipulate the classical gold standard to increase their power. So what we want to do is we want to get gold out of central banks. We want to get that whole monetary power out of government and put it into where it should be, individuals, the private sector, and let companies create currency and compete with one another. And the best company with the best currency, without government interference or without government intervention, let that company, or companies succeed in terms of what they're doing. With regard to silver, yes, you're right. It does have an industrial component, but historically it has also had a monetary, demand for it as well. And the way I see silver is a little bit different from most people. To me, it's a gold substitute. In other words, right now, 108 ounces of silver does the same thing for you that 1 ounce of gold does. And that's basically gives you a tangible asset that is outside of the banking system. Now, why is the ratio 108 or 115, whatever it is at the moment, when the amount of silver in the Earth's crust relative to the amount of gold in the Earth's crust is about 12 ounces of silver for every 1 ounce of gold? Why isn't the ratio 12 to 1 instead of over 100 to 1? Well, at the moment, people are looking at the industrial demand for silver because they're saying the economy is falling off the edge of the cliff. The demand for silver is going to be down, just like the demand for copper, demand for oil, and other basic industrial commodities. And I think that's a knee-jerk reaction, explaining why the ratio has gone up the way it has. But if you look historically at precious metal bull markets as to what happens, the ratio, that gold-silver ratio, tends to fall because people start to understand that, well, silver is in a much tighter supply. There's less silver in the above-ground stock than the above-ground stock of gold. And the Earth's crust, it's only 12 to 1 or 15 to 1. So maybe I should be buying some silver instead of gold, because I already have a lot of gold. I want to have some silver too for diversification reasons. Also, gold has been confiscated. In the 20th century, it was confiscated. Gold was confiscated by, Lenin in Russia, Mussolini in Italy, Hitler in Germany, and Roosevelt in the United States. During that time, silver was not confiscated. So people are saying, okay, well, maybe I'll own silver just for a diversification point of view for that reason too. And if the ratio does fall, I get a kicker in terms of relative performance when measuring, purchasing power. So there are advantages to silver. I wouldn't go 100% in silver. What I generally recommend is if you're inclined to take the risk of owning silver, do up to 25, maybe you really want to be aggressive, 1/3 of your portfolio. And if I'm correct about the ratio falling, remember it was 30-1 in 2011 when metals reached their last peak. And if it falls to 30-1, putting 20% of your silver now, you're going to be have a much higher percentage of purchasing power focused on silver at some point in time in the future if the ratio does fall to anything close to 30-1 or even below 50-1.
You mentioned confiscation. Do you expect that to happen again in let's say the States? You're American, of course, but you live in Europe most of the time, I believe. Is it something you would see happening either in the States or Europe, that private individuals cannot hold gold anymore?
It is a risk. And in my view, the risk increases, every $100 the gold price rises. And keep in mind, there are two types of confiscations. So the hard confiscations, like the ones I just described in the 20th century, where gold is actually taken out of the vault and effectively, theft by the government, stolen by the government. Then there's the soft confiscation, which is a soft kind of theft. For example, in the 1980s, when the oil price rose dramatically, the U.S. federal government imposed what they called a windfall profit tax, which was basically taking away the gains that companies that owned oil would have otherwise earned. So that's what I would call a soft confiscation. So you're probably going to see some form of confiscation as the gold price rises, and I do believe the gold price is going to rise considerably from here. So what you have to do is, again, think about diversifying. Store gold in a variety of different places around the world where you feel more comfortable with political risk and perhaps the political risk in your own country. Store some physical gold in safe places, that you feel comfortable with. What I do always say, though, is don't store gold in a bank for two reasons. One is that you don't know whether or not the gold is really stored there, because banks are in the business of lending, they're not in the business of storing. And secondly, if there is a hard confiscation, the first thing the government's going to do is going to go to the local bank and say, turn over all the gold to me. So don't store gold in banks, store it elsewhere.
Yeah, it's like letting the fox guard your hen house.
Yeah, store gold, either when you buy physical gold, there are two things you can do. You store it yourself or you store it professionally. And when you store it professionally, like what we're doing in GoldMoney, you make sure it's insured, make sure it's audited, make sure it can be delivered to you anywhere in the world. All of the normal precautions that you'd want to take, because gold is the bedrock asset in your portfolio. It's your basic form of liquidity. It's money with no counterparty risk. It's money that you own, as I always like to keep repeating. And therefore, you have to take those steps that are important to protect it so that you sleep well at night. You don't want the bedrock asset in your portfolio placed at risk. So you want to take precautionary steps to make sure it's always going to be there, come what may.
And we also have, of course, the concept of paper gold, and we've seen a lot of interesting things happening in the paper gold markets over the past few weeks or so. Things seem to be settling down a bit at the moment, but are you still of the opinion that there are actors out there trying to suppress the gold price?
Oh yeah, without any doubt. It's just like what happened in the 1960s with the London gold pool. But things were much more visible back then, and governments were much more honest back then. It wasn't until Nixon and his dishonesty in terms of monetary decisions that things really started going off the rails. And it's just continued to build and get worse since then. But it's quite clear to me, and I've said this recently in a number of interviews, that what I call the London gold pool version number 2 has already broken. But in contrast to what happened in March of 1968, central banks are not making an announcement that they're going to stop suppressing the price of gold. They're just going to continue and do what I call it as a managed retreat. They don't want the gold price to rise because it's a obvious red flag. that what they're doing with national currencies is debasing those national currencies. And when currencies get debased, the demand for the currency declines and people move into other things. And so when people see the gold price rising, that's something central banks want to stop.
And the canary in the coal mine, as you always
competitor.
used to say back in the day, a rising gold price is like the canary in the coal mine.
Yeah. So, they want to stop prices from rising, and they'll continue to do what they can do, to suppress. A lot of it is propaganda, because they don't actually want to spend their gold or sell their gold, because once it goes into the market, they may never see it again unless they're forced to some kind of confiscation.
And how do you explain then, for example, that the German and the Dutch central banks are so openly, well, not promoting gold, but they seem quite outspoken and positive about the gold being the most important asset on the balance sheet, that you need it in case of an emergency scenario. They're even repatriating gold, of course. So do you think there's a split in the central bank cabal, or that some central banks want to suppress the price, the others are actually trying to talk up the price? Or
yeah, exactly. There are two different circles within central banks. There's the circle under the influence of the American government, and then the circle of other central banks who think for themselves. They think for themselves as sovereign countries and what they need to do to maintain a national currency if the international monetary system, as it's presently operating, falls off the edge of the cliff. So they're bringing gold back, to their countries, and that's a prudent thing to do if you believe that central banks should have a role in creating currency, which, as I mentioned earlier, I don't believe. I'm a believer in free markets. I'm not a believer in giving central banks any type of power to exert financial repression on its citizens, to serve central banks and the banking community. So, yeah, we see central banks, two different stripes. On the American side, that's where the price suppression is. Other central banks are accumulating gold in order to protect themselves, because they recognize that this post-World War II monetary system, it collapsed in 1968, where effectively Bretton Woods system, died then. And it's just been a mishmash of different things and actions taken, since then, that have led to the present, recurring present problems, as well as recurring crises that we've had since then.
You would expect that behavior from central banks in Russia or China, but not so much from allies such as the Netherlands and Germany. It seems to be going against the consensus of the Western nations.
Yeah. Well, again, let's see what happens as we go in the future, and how much of that gold was really returned, and how much of that gold was just bookkeeping wise returned, but still out on loan to various parties, agents of the central banks, to act as a suppression of the gold price. What they are accounting for in their balance sheets could be totally inaccurate, because even those balance sheets of central banks are audited. If you look at what they call as gold, it's actually gold and gold receivables, which violates the most basic principle of accounting, that you can't have a tangible asset and a financial asset as one line item, but that's what central banks do. So, how much of that gold is really in the Dutch vaults? How much of that gold is really in Frankfurt stored in the Bundesbank's vaults? Or how much of it is still out on loan as part of the price suppression scheme? This could have been just propaganda by various central banks to make people feel good, but the reality is something different. And this is part of the problem I have with central banking. Not only is it some mystical priesthood, they operate behind closed doors. And in a free and democratic society, I don't think there's any place for that.
No, transparency is key. And that's also what I like about Bitcoin, for example, is that everyone knows and can verify how much is created, following what kind of emission schedule. The ledger is, of course, also transparent or pseudonymous. What do you think of Bitcoin? Because GoldMoney used to offer via a subsidiary, Netejo, Bitcoin at some point in the past, I think in 2015 or so. Are you still following the Bitcoin world? And what do you think, for example, of the upcoming halving in 10 days from now?
Yeah. Well, you know my views on Bitcoin.
You've
I've gone
changed a bit,
a
I
couple
think.
of,
You've warmed up.
yeah, it's a couple of changes along the way. You know, GoldMoney actually twice was making a market in cryptocurrencies, but because of regulatory issues and because it was only secondary to our core business, which is of course the precious metals, it just didn't, you know, financially or economically make sense for us to continue with it. So we stopped it, and maybe in the future it will be offered again, making a market where you can use cryptocurrencies to buy gold. But you know, as I was describing money earlier, they call cryptocurrencies cryptocurrencies. They don't call them crypto money. It's not a tangible asset. And obviously, I put much more faith in a complex mathematical model than I do politicians' promises or central bank promises. So I think cryptocurrencies are much better than fiat currencies, but they're not gold because they're not a tangible asset. You know, as far as cryptocurrencies are concerned, I do believe they have a role to play. Again, we live in a world where we cannot predict the future, and we have to take those steps, whatever they are, to sleep well at night. And I think one of the keys to sleeping well at night is to be able to diversify your assets and diversify your forms of liquidity. And while gold is the bedrock asset in your portfolio, maybe the next important asset would be other forms of liquidity which governments cannot confiscate, or governments have a hard time interfering with.
It's easier to confiscate gold than it is to confiscate Bitcoin for a government.
Well, they can confiscate gold, but if you have your gold distributed in 6 different countries around the world, what's the odds of all 6 countries confiscating that? Plus, if you have gold buried in your back garden, that's not going to get confiscated either, is it? So, you know, it's governments trying to do things that people don't want. You know, let the free market operate, let free will prevail, let individuals make choice and make this, let individuals have choice and make decisions for their own lives as to fulfilling their needs and wants and getting on in their daily business. But, you know, we live in a world that's become so heavily regulated. We're just killing the opportunities of individuals to create wealth, to interact with one another in commerce. And we don't want to thwart that. We don't want to impede that. We want commerce because commerce is, the more individuals can interact with one another on a voluntary and open basis in a level playing field, the more opportunities there are to create wealth and raise everyone's standards of living.
Yeah.
You know, that's how humans have progressed since, you know, prehistory.
But then we live in dark times because it seems capitalism is dead right now, with the government literally bailing out and buying all sorts of companies. Of course, quite often with good intentions, I'm sure of that, but the end result is that there's no free market anymore.
Yeah, exactly. You know, there may very well be good intentions. I don't doubt that. There's probably a lot of evil intentions by various vested parties who can, by spending large amounts of money, get things done favorable to their own particular company or their own particular industry. You know, that's where you got thousands and thousands of lobbyists spending, you know, billions of dollars every year in Washington, D.C. I mean, the system's become so corrupted because the money's become corrupted. I mean, Lenin was absolutely brilliant. He says you destroy society by debauching and destroying the currency. And by, you know, moving away from gold, which was politically honest, sound money that preserves purchasing power over long periods of time, we moved away from that level playing field. And we're suffering the consequences. So, you know, to sort of sum up here, Paul, I think it's quite clear that what I'm looking for here is this economic catastrophe that it's becoming. The existing monetary order is not going to survive, in my view. I think we need to go to a new monetary order, one that enables individuals to be creative, entrepreneurs to invest capital, create wealth, hire people to do things, and so we move forward. And just to, again, I'd like to distinguish between money on one hand and currency on the other, like I was doing with cryptocurrencies. We have to recognize that they are different, and technology has a different impact on them. You know, gold does the same thing today it did 5,000 years ago. It's still a means of economic calculation, but we've become much more efficient today in terms of the currencies. You know, gold doesn't circulate by coins anymore. It circulates digitally through GoldMoney. We also have other forms of currency like the cryptocurrencies and Bitcoin. So let's allow humankind to move forward and advance. Let's recognize that the 20th century system of government intervention in markets has resulted in economic growth far below historical norms that would be possible if people were free to choose and allowed to do things on their own without the heavy-handed, ham-fisted interventions by government.
So at least there's a silver lining then. There's hope. Hope for sound money.
Well, you know, humans always progress. That's the nature of humanity. But we oftentimes have to learn lessons before we go to the next level. And I think what we're in the process of is we're in an environment where we're learning a lesson that, you know, government is not a substitute for self-reliance. And I think that's going to become increasingly clear in the months and years ahead. And as a consequence, I think there are going to be some tough times for people who are not prepared. And one of the best ways to prepare for an uncertain, unpredictable future is to own physical gold, and if you're so inclined, some physical silver too, you know, based on their 5,000-year track record.
Okay, well, thanks a lot, James, for your time. It was a pleasure to talk again.
Yeah.
Stick around if you want. I'm just going to stop the recording.